We provide both the cooling systems that keep that temperature consistent and keep all those servers running. And we provide the uninterruptible power supply systems that allow the data center to be able to operate most efficiently and reliably. So it's those two big things. So think of it as it's the gold rush, and we're the guys selling the picks and shovels.
Charles Mizrahi and guests may hold assets discussed in this episode. This podcast is not investment advice and is intended for informational and entertainment purposes only. You should do your own research and make your own independent decisions when considering any financial transactions.
As chairman and CEO of the industrial giant Honeywell for over 16 years, Dave Cote grew the company's market capitalization from around $20 billion to nearly $120 billion, delivering returns of 800% and beating the S&P 500 by nearly 2.5 times. Currently, Dave is executive chairman of Vertiv Holdings, a global data center products and service provider. Dave is also the author of How to Be a Leader, 15 Minutes a Day to Establish Communication, Resiliency, Creativity, and Humility. I recently spoke to Dave, and we talked about the amazing growth in AI and how it's providing a huge tailwind for Vertiv Holdings. Dave, welcome back to the podcast. I can't believe I looked it up, and the last time we spoke was September 2021. So we're talking about 3 years already. It seems like yesterday. How's everything been going for you? How's it going?
It goes quickly. It goes faster and faster, doesn't it?
Yeah. Last time we spoke, we talked about Honeywell, the CEO. You were starting, you had a new SPAC. A SPAC was Vertiv, this company that, I think maybe a handful of people knew. SPAC went live, I think, 2020 at about $10 a share. You were a $1 billion market cap company. The end of 2020, I think you did around $4 billion or so in revenue, and you lost money. When I had you on the show September 2021, stock was doing phenomenally well. You were up to $28 a share, $10 billion market cap. How have you done since?
Well, when we got into the inflationary times, so think of that as the second half of 2021, price didn't keep up. And when we got to the fourth quarter, we had a literal debacle. And because supply chains were so stretched, we had difficulty getting product, couldn't deliver. So everything stretched out. And at the same time, costs were just inflating at ridiculous rates. You couldn't even get the components you needed. So that combination of stretched out lead times and rapidly escalating costs caused us a financial debacle in the fourth quarter of 21.
Yeah.
And it was at that point. I was just embarrassed.
Yeah. Let me build that up, Dave, because I want to give all our listeners a real good 10,000-foot view. You lived it, so you this to you is you just jump right in. But let's give a 10,000-foot view. So you were at Honeywell. You took the company over 16 years from $20 billion to $120 billion. Right. So that was amazing returns. You beat the S&P. You delivered for shareholders 800%, beating the S&P by nearly 2 or 2.5 times. You absolutely were amazing. You took a company, and folks, I'll put the link in to the previous interview, which we had in 2021. Dave tells an amazing story of what he did at Honeywell, and really one of the most amazing turnarounds and amazing creation of shareholder value. And then in 2020, you get involved with a SPAC on this company called Vertiv. And people are thinking you're a one-trick pony, right? That's basically, the guy was good for one period of time. I don't know. You don't get the hunting dog is done. You go out, you hire a great CEO, you take Vertiv, which I want to talk about because you are right in the sweet spot of AI, which is absolutely amazing. And folks, total disclosure, I've been a shareholder, and my family's been a shareholder back from 2020 or so. So we're pretty happy. So behind that, you take this company, Vertiv, along with your phenomenal managers, and you have a new CEO in the last couple of years, and the stock comes out at 10, goes up to 28, falls back. We'll talk about that debacle you're talking about in a second, but it's trading now about $100 a share. So you took that company, and you and your team, I know you because you're a humble guy, you took that team from a $10 a share for $1 billion market cap to $40 billion. And I think your stock's up, what, 300-400% in the last year alone?
And we're not done yet, Charles.
We're not done yet. That's what I want to hear. Okay. That's what I want to hear.
I would also say, one of the other things I got to say about Honeywell that I was quite proud of is we created 2,500 401k millionaires during that process, with 95% of them below what you would consider executive level. And the lowest paid guy, which I was always proud of, was making $43,000 a year and became a 401k millionaire because he just put everything he had into the stock. And it paid off extraordinarily well.
Yeah, just amazing. You were an amazing creator of shareholder value, and people always say about stake owners versus shareholders. Put all that aside, the impact you had for your business is one thing, and for all the goods and services you provide. But you impacted so many people's lives, which people don't think about when they talk about capitalism on such a micro level. That guy who was a line worker, who has $1 million now that can leave to his kids, have a better life, or what have you. That's not talked about much.
Yeah, it's as you might imagine, I'm a big fan of capitalism, not just because I benefited from it, but it gave me the opportunity to benefit from it, an opportunity that I don't think I'd have had in other places. And in my job at Honeywell in particular, I visited about 110 different countries. And I can't say there was one that I ever came back from where I said, gee, they've got a better system for helping to elevate people than we have. In every case, I came back saying, fortunately, I was born in the U.S. because I don't think the same kind of opportunity would have existed other places. So I'm a big fan. Business has done more to elevate the standard of living of people around the world than any other phenomenon that people can point to.
No. Buffett calls it you won the ovarian lottery if you were born in the United States. You could have been born anywhere else in 199 or 194 countries, depending on how they count the border, put borderlines. And for those people who are in America, in the United States, say what you want, we still have a taxation system, a form of government that's the envy of the world.
We should all be thanking our ancestors who had the guts to make the trip and say, thank you. They made a difference in our lives.
100%. Okay. So now let me just go back because I want you to tell the Vertiv story, because that story, Vertiv, is really one of faith in your business leadership and the business leadership of your team, and the way your company is positioned in really a tremendous mega trend, which I want to hear more from you, but I think we're in the first inning of a huge mega trend that's going to last a generation or so. So in February 20, so let's go. Let's take a step back. What does Vertiv do in one sentence? Keep it as simple as possible for someone like me. What does Vertiv do?
Well, the first thing that people need to understand is that data centers are important. And there's a tendency to think my information is in the cloud, and to just think of it as this kind of amorphous thing that's out there. Well, the reality is the cloud is a bunch of locations that have a bunch of servers in them. So that's what the cloud is. So data centers are fundamental. In data centers, there are two big things that have to happen. One is the temperature inside has to stay very consistent and generally around 75 degrees, and it has to be everywhere. The second is that you need what's called uninterruptible power. So you can't have a data center that goes out for even a few hours because everybody who's trying to use it is impacted by that. We provide both the cooling systems that keep that temperature consistent and keep all those servers running, and we provide the uninterruptible power supply systems that allow the data center to be able to operate most efficiently and reliably. So it's those two big things. So think of it as it's the gold rush, and we're the guys selling the picks and shovels.
Okay, I want to dig into that, pun intended. Okay, so okay. Here's what we got, and this is what I want our listeners to just fully understand here. Is when you have these chips, and correct me if I'm wrong, when you have these new chips from NVIDIA, which is the AI revolution, they're processing enormous amounts of information. They're crunching it. That raises the temperature level to something where you just can't go and put a fan in. You really need to that's raising the heat level. Is that right?
Yeah. Those GPUs, the graphic processing units, just run much hotter. And that's one of the reasons why we've expanded the technology into something called liquid cooling, that instead of just having, say, the ambient air temperature maintained at 75 degrees, you actually have cooling liquid running directly to the servers to dissipate the heat.
Okay, so you have all this data, which everyone thinks, as you said, where is it? In the cloud. Nobody knows what that actually is. But there are physical locations where you have these centers with a whole bunch of servers in them, right? You don't need many people. Yeah. You just have these server centers. Okay. Now you have these chips from NVIDIA, for example, which is really the only one that's making now the H100s and now the Blackwell. Now they are made to process enormous amounts of information, lickety-split. And by doing that in these data centers, it raises the ambient temperature. I saw something here that it raises by 11 or so degrees. Is that I remember I saw something 11 degrees hotter than AI chips. No, I'm sorry. AI chips run 11 degrees, raise the ambient temperature 11 degrees hotter. Is that right? Or did I see the?
Yeah, I'm not sure about that stat. I do know that those chips do run hotter because they're processing an awful lot of information, to your point, and that just cooling the air around it is no longer enough. You actually have to run a liquid close to it that can take that heat away.
Okay. Now you have this heat coming in. That's part one. Now, what happens is if the ambient temperature gets too hot, you basically have a chip that doesn't work, right? It just
correct. The chip melts down, if you will. It just won't operate anymore.
Perfect.
Not a good thing.
Not a good thing, especially what are the costs of these chips now? $30,000-$40,000 or something? Or?
Oh yeah, the amounts are. I don't know off the top of my head, but yeah. They're not inexpensive. Yeah. This is not something you want to be replacing.
And you just can't get them, from
yeah.
Jensen.
And you can't get them. Never mind the customer service problems that result because people's systems won't run.
Right. Okay, that's part number one. So you are the lifeblood of AI, data centers. All this information that we're talking about does not run if the heat, which just goes back to something just simple thermodynamics. If it's too hot, it doesn't work. Right, that's really it. That's really it.
It's true of car engines. It's true of servers. It's you always have to figure out a way to dissipate heat.
Okay, that's number one. That Vertiv. So right off the bat, we could easily see why Vertiv has a huge runway as more data is growing at an exponential rate. More AI, generative AI, is being increased. More heat's dissipating. They need your cooling systems.
Correct.
Okay, super. Second, which I was listening to a Senate hearing. That's what I do for fun. A couple of days ago about this, and they had one of the top guys at Micron, and he was talking about they're building servers. Micron is, and not only all their infrastructure around the best locations where they can get consistent electricity. Because he mentioned something to the effect of a glitch for a fraction of a second just costs huge amounts of money to the company.
Chaos. Yeah, you can't. You've got to have immediate switchover, and switch over in a way that the servers don't notice.
Right.
And this is it's quite complicated. I mean, it sounds pretty simple. You're bringing electricity in. You just got to make sure that it's consistently getting to all the servers. But it's actually requires a lot of sophistication to be able to do that, which our guys do.
Yeah. Yeah, you look, you guys. I was looking at the numbers. You did about $4 billion or so when you came out in 2020, and now you're doing close to $7 billion. You lost money that first year, and now I think your net income was around 400 plus million at the end of 2023. So you're doing a lot of things right. Not one thing right, but a lot of things right. And when you go on your website, which I found so amazing, is you have the co-founder, CEO of NVIDIA, the man, Jensen, who gives, I don't know, if this thing is worth its weight in chips, an endorsement of how important Vertiv is to NVIDIA.
Yeah, that was very nice of him to do. I have to say our CEO, Giordano Albertazzi, has developed a good relationship with the NVIDIA folks and Jensen Huang, because we've got to be able to work together. And they recognize, very astute of them, they recognize that they can't just say they're chips producers and everybody else figure out how to use it. They want to make sure they're ahead of this so that data centers everywhere are prepared in a way that allows them to be able to run their chips effectively. So I think very forward thinking of him.
Yeah. Look, without you, he has basically a wafer. He has silicon. There's nothing there. It needs that cooling system and electricity to work.
It's got to go into servers that have to go into data centers that all has to operate.
Yeah. Okay. Perfect. So that's what Vertiv does.
Like I said, picks and shovels.
Okay. So Vertiv is in the sweet spot of this amazing growth. NVIDIA is growing by leaps and bounds without competition at this point. 80% market share. Just the headlines are there, but not much talk about you until recently, because I saw the Wall Street Journal had a very good article about you. I'll put the link in the show notes. In May 28th, cooling for AI is a hot stock market trade for now. Companies like Vertiv that can help artificial intelligence data centers dissipate heat have had gains of more than 600%. So people are starting to hear about Vertiv. And you're still a small company, right? You're $40 billion or something?
Yeah, market cap is around 40 now.
Yeah. So you still have
not bad given it was just 4 years ago.
Yeah, it was 4 years ago, and then you compare it to the trillions that NVIDIA is worth, and now Apple approaching $3 trillion. $40 billion used to mean a lot, right? It used to be money. It used to be money.
For me, it still does.
Yeah, it's quite amazing. I want to get to that point that you brought up before, Dave, and then we're going to talk more about your book. February 2022, you guys came out with fourth quarter 2021 earnings, and you just missed the mark.
Debacle.
It was a nightmare. Your earnings missed by EPS missed by 24 cents. Everyone was expecting 28 cents a share. You came in at 4 cents. That's a big miss. And revenue was supposed to.
It's a debacle.
Yep. We're going to get to that. We're going to get to that debacle. It was an if we weren't a G-rated show, I'd tell you it was an S show, because that's really what this was. And I remember I don't know how much the stock fell that day. I think it fell 20-30% or something after this.
Yeah, eventually, it went from 28 to like 12 or something like that.
In a heartbeat. Yeah. And
with good reason.
Yep. Hang on. I'm going to get to all that. I just want to set the stage. Revenue came in at $1.4 billion. You missed by 13 or 14 million. And for folks out there, we're long-term investors, but this is what created the huge opportunity for us and we recommended this stock to our subscribers in June, right after it took us, as you mentioned, debacle. But I want to talk about that for a second, and then we saw you turn things around. And I just want to share with everyone.
You can tell it still pisses me off.
Oh boy.
The heat gets up in me every time I think about it.
Yeah. Folks, if you're listening to this, a podcast, Dave's face turned red, and thank God he has Vertiv cooling to just keep his blood pressure low. So this was something, and I just want to share with everyone listening. It doesn't get enough press, and this is what impressed me so much about you, which I was impressed from the beginning about you. So this just confirmed the type of guy that you are, and that's why we always look for CEOs that we want to be partners with, and feel free to give the keys to our house to. That's the way we look at it. And you were one of those. You're one of those guys. I never heard, and I've listened to and participated in conference call and earnings calls for close to 40 years since I started in 1983 as a floor trader and started following companies. Never once did I ever hear a chairman, CEO, and get on the call and start off with, "I'm disappointed and embarrassed." And then No excuse, just an explanation. We got behind on the inflation recovery curve with insufficient price and stayed there all year. And then you took body blows. Analysts were just beating you up big time on that. And you stood there and faced the music. Now, I look, you're a humble guy. I know that. Did your PR people, or do you even have PR people that said, Mr. Cote, an executive chairman doesn't get on and apologize and tell everyone how disappointed and embarrassed? They put on a brave face. Was that even in your thought process? Did anyone even suggest that to you?
No, not really. I'm pretty candid generally, and I think people know that when I feel a certain way about something, and in this case, I felt very strongly, I wrote those words myself and said, this is what I'm going to say. And that's all there was to it. No, I didn't go through a bunch of arguments with it. I think everybody knew I was angry enough. And I can remember telling the team, as a management team, you guys have a scalpel. As a chairman, I have a hatchet. You haven't used your scalpel, so now I have to use my hatchet. And we're going to fix this.
Last week when we spoke privately on a call, you told me something that I hope you share with us. Is not only that you missed on these numbers and you had to take out your hatchet, which you weren't happy to do. It's, as you said, and I quote, it's always, those conversations always difficult because your CEO eventually was replaced. And I know, from the past watching you in 2020 and 21, you had a lot of respect for that CEO. And it must have been, you personal. It's not always easy, telling people that you got to leave. But you told me something on the call when we spoke, you and I, last week privately. You said what you were disappointed and embarrassed most about, or in addition to, was how many people you let down. Could you expand on that?
Yeah, I felt like there were a lot of people who invested in Vertiv because of me. And that includes family, who all looked at it and said, okay, we'll assume Honeywell wasn't a fluke and that he actually knows what he's doing. We're willing to take a bet on this guy. And, I had friends and family type investors who'd been with me a long time in Honeywell and trusted me. And man, that really, really bothered me. And I thought, all these people trusted me. I can't let them down. I'm going to fix this thing. I'm going to get in there, devote a lot more time myself, and I'm going to fix this thing. And that drove a lot of my behavior. I didn't want people feeling like they'd relied on me and I'd let them down. I just couldn't stand it.
Yeah, by the way, guilty as charged. That's the reason we got into Vertiv originally was because of I missed out. Brilliant move of mine, watching you for 16 years and never once buying Honeywell. I kept saying, no, I'll wait for the price to go down. I thought it can't last. And 16 years I watched it go by, so I'm not going to do that again. I'm not going to do that again. So I bought shares. a little after, I think it was $12, a little after the SPAC. And or maybe we had some during the SPAC, I'm not really sure. But bought it from the beginning, just on you. When we held them, just on you. I just want to share with my subscribers is that we recommended the stock right after, because it wasn't my money, it was my subscribers' money. I wanted to make 100%. So you said, here's what we're going to do. And in the next quarter, you did what you said. Things were starting to turn around. And the next set of numbers were night and day.
Yeah, I did something in 22 that I'd never done before, and that's give guidance by quarter. And I'd never done that before, but I felt like because this was going to be a hockey stick, given the way you're getting pricing today, but given the lag in shipments, you weren't going to see the effect of the pricing for anywhere from 6 to 12 months. Mm-hmm. I actually had the finance guys lay out what this would look like by quarter. And it showed, as I recall, we would have a slight loss in the first quarter, a decent gain in the second, a much better gain in the third, and then a very good fourth quarter, which I told them would lead very well into 23, give us a much better launching point. And I made a point of showing that every quarter. And I said, I got to do this to build my credibility again, because right now my credibility is shot. And I've got to be able to show this hockey stick, which nobody ever believes. But over time, if I can show, hey, here's the hockey stick I showed you, and here's our actual performance, we're pretty much in line with that hockey stick, it would do a lot to build our credibility as a company and mine.
Right.
And of course, it worked out that way. And as you recall, I put in a pay plan that I got a lot of grief for in 22 because they felt like all the targets were unrealistic. And that for 23, we wanted to generate $1 billion of what we called adjusted operating profit, which was up from like 350 the year before. Mm-hmm. So nobody wanted to believe it. And of course, it paid out very well because we hit like 1055 or something like that. And I can remember talking to analysts and they'd say, is this just kind of a motivational thing? And I said, well, it's supposed to be motivational, but I don't put in pay plans that I don't think are going to pay because that doesn't work. Yeah. The only reason I do this stuff is to have managers and leaders say, if I can get there, not only is this good for the stock price, it's good for me personally.
Yeah, 100%.
And of course, it paid.
Yeah, I got my dates confused because it was all a blur at that time. It was like we were watching it. You came out with this in 2022. This was the debacle from Q4 2021. You reported in February. Stock took a nosedive, stayed down low, and then you came out, and it was the first quarter of 2023. You came out with earnings for the whole of 2022, and this you turned the battleship, and you turned it away. I remember. That was the point. You for the first quarter of 2023, you exceeded guidance on all your financial metrics in the first quarter of 2023. So it took you close to a year to turn this ship around. That's when we stayed out. We watched this. You generated $25 million in free cash flow versus negative $150 million 1 year before, and you confirmed revenue guidance for 2023 of $6.5 billion. So we looked at that. We said, this guy got it. And the stock went all the way, was trading, I think, went all the way down 12, then was hanging out at $16 or $18 a share. And then right after you came out with these earnings for the first quarter, it started moving up, and we got in around $24 a share. I remember one subscriber sent me, wrote it, said, Charles, why didn't we get in at 12? And you're just giving us the crumbs. All the big gains have been made. And I said, look, I wanted to make sure before I take my foot off first base that Dave turned this company around. And we waited. We patiently waited. Okay, we bought in a higher price, but we bought in a much more, we saw everything turning around and everything working. So, look, we're never going to pick the exact bottom. I think in all my years I did it once, and that was just by luck. But here, you actually turned this whole thing around, and I think one of the first things you did is you replaced your CEO.
Well, there were a number of things that we did. So one was focus a lot on price and getting it.
Wait, Dave, let me interrupt you a second. I'm sorry. Tell me what, because you guys are smart guys. You got the smartest guys on the planet working for you. You see the problems of all of the components and all the supplies. No one is figuring out, your CFO is not looking at cost of goods, how much it costs to make these things, and all of a sudden you're putting them in, you're not making money? No one figured that out? How does that pass? How does everyone miss that?
Yeah, I'd say this is one where everybody understood it intellectually. But what you run into is, remember, we had 40 years of really inflation not a problem.
Right.
You had various components or commodities from time to time that could be an issue, but basically inflation wasn't a problem for 40 years. And companies that got like a 1% price increase in the year were doing very well. Now, all of a sudden, you're confronting an organization with, we need a 20% price increase. They just don't know how to handle it.
Yeah.
They think they're handling it. All their reports will show that they're making great progress. All their anecdotes.
How do you show it? I understand that part, but when you look at the numbers and you see your costs rising dramatically, how are you saying that we're dealing with this intellectually? I'm looking at something that cost me $1, for example. Now it costs me $1.40. How am I making money? How here's my price I'm selling to the customer. Our margin just shrunk. What are we doing?
Well, I'd have to say the management team, in my view, believed that it was all going to get fixed with that lag that we were talking about before. That if you look at things the way they are, yes, costs are a problem relative to price. But if you really believe that you're getting price on all your new orders, which are going to be shipping sometime in the next 6, 12, 15 months, you can find yourself believing that this is all going to get fixed at some point, which, by the way, I believed also because of all the stories I was hearing about the price increases that were being implemented and that I believe they believe were being implemented.
And that was that was a transitory inflation we kept hearing about, that it was going to, I'm not joking, that was the word, right? They used, the government used transitory inflation. It was going to pass. And you and I, you're a little bit older than me, but you definitely remember the 70s, how inflation was devastating. And I guess a lot of people who were born after 1975 never saw inflation. So I totally get that.
They just didn't. And like you, I didn't believe the word transitory. I found it humorously frightening that people actually thought that and weren't preparing for it. And like I said, we were trying to, because it was spring of 21 that I first started talking about, look, okay, we've got to do something differently here. And it was only when when we saw the results for 22 that I personally got involved. And we had meetings that would go all morning, every Thursday, with each region reporting out. And we were very specific about when's the increase going out. I want to see the data. I want to see the document that says that it's happening. I want to see it in the orders, start tracking orders to make sure that that price is actually in there. Because in a low inflation environment, you kind of get into this mentality of, well, yeah, we want price, but don't lose an order.
Right.
And you start to do that. Sales guys hear that and say, okay, well, for sure, I'm not going to lose the order, and tell them because it was because of price. So it takes a very different mentality and mindset to make that happen. Yeah. Which we got.
Look, it takes someone with experience and who lived through, because look, a lot of CEOs who are out there, who are 50 or younger, they don't know what inflation is. It was in the 70s. It was just terrible. It was just absolutely terrible. My father was a working man. He was a warehouse manager, and I do remember early. My mother used to go shopping on Thursday nights, and this is, let's call it 74, 75, 76. And I remember when she used to bring her, she'd take the car, go to ShopRite, nighttime, come back, and each week my father gave her the same amount because he was a working man. It was a salary he got. No pardon. Every week there'd be literally fewer bags to bring in the house. And we cut down meat once a week. Meat was too expensive. We never had lamb chops in the house. Inflation was terrible.
Yeah, and at least now we've got a generation of business leaders in their 30s and 40s who do know what it's like. So hopefully
it won't happen.
This won't be a problem in the future, because there'll be a bunch of people screaming, no, stop spending like this, because we're going to end up with an inflation problem.
Yeah, just absolutely amazing. So Vertiv, you went in there and so you did that. That was your first task. You got all the numbers in line, and then I don't remember the year you replaced your CEO.
Yeah, actually, we replaced a number of people. If you go back and look at the announcements, there were probably five people that we replaced, and I was particularly impressed with the guy who was running Europe for us. And when we ran into this debacle, which was largely driven by the Americas, we brought him in to run the Americas. This is Giordano Albertazzi. And I was quite impressed. And
Dave, what impressed you about this guy?
Interestingly, he would say, his background wasn't one that lent itself to bold management. It was European, no reflection on Europeans, but in general, companies there, bold management isn't something that happens. And I'm sure I'll get a note or two on that, but it's generally true. It's a stereotype, but not true of everyone, but generally true. And he worked at Emerson for about 20 years, and they were tended to be much more, let's say, evolutionary in their approach to things. Mm-hmm. And one of the things when I first got there is I said, in Europe, I don't understand why your fixed costs are so high as a percent of sales. And the answer everybody always gave was, well, it's Europe. I'd say, well, I'm sorry, but that's not a good enough answer. And I put it on Geo at the time to say, you need to fix this. You can't have this much in fixed costs. And in the space of about 15 months, he fixed it. And just, kind of the classic stuff, grow sales, hold fixed costs constant. He did it. And said, okay, definitely worth giving this guy the Americas. And the Americas still has so many process issues. And I discussed some of them with him. He found a bunch of others and just started fixing it, knocking it down. And what kind of put it over the edge is, if you recall, everybody was big into working from home. Mm-hmm. And even when they theoretically stopped working from home, they had just Tuesday through Thursday, you had to be in the office. You didn't have to be there Monday and Friday. Mm-hmm. And I can remember having the discussion with the CEO and the management team that this is a company crisis. You are not going to fix this by working from home. People need to be in the office. So I was assured that they were working on a program to get everybody back in, and they guaranteed that all the staff would be in the office in Columbus 5 days a week. So I did one of the things that I recommend in the book, and I made a surprise visit to Columbus. Nobody knew I was coming. And I came on a Monday.
Wait, 1 second. How many people in Columbus, Ohio?
I want to say about 1,500, I'd guess.
Okay, so Dave Cote flies in to Columbus, Ohio on a Monday morning, and you have, I don't know, would you say 1,500 or so?
Let's say 1,500 that are supposed to be there.
Okay, 1,500. Now you get off, you get into the parking lot, you go in the building. What do you see?
Well, got myself through reception because I had a key card. And then I went to the executive offices to see who was there. The only two staff members who were there were the CFO and the Americas president, Giordano. No other staff members were there. Then I took the CFO and I said, okay, we have 4 buildings here. I want to walk every building, every floor. I don't want anybody ever saying that, hey, all these people were working, you just didn't see them. So I spent 2 or 3 hours just kind of hustling along, looking for people. And I found very few. The ones I did find, I would say hi to, and I'd say, hey, appreciate you being here. And I can't tell you how often they said, well, I'm not going to come in tomorrow because I came in today. And I was just apoplectic over the whole thing. And I finally ran into 4 people who were all working and told me they were there 5 days a week. And I said, wow, well, that's terrific. Then, what organization do you work with? And they says, oh, well, we're with Vertiv Philippines, and we're here to, work on some projects for the Americas guys. I said, so the people that we brought all the way from the Philippines that work in 5 days a week and our own people aren't. So I went to war on this one and said, everybody shows up 5 days a week. If they don't show up and continue not to show up, it's a voluntary quit. No severance, no nothing. This is a voluntary quit. Your job is to show up. We're a company in crisis. We need to get this fixed. Well, out of the 1,500 or so, we ended up having to let go like 60 people who said, I'm not going to do that. We said, okay, well, it's a voluntary quit. And that included managers, not just employees, because you ended up with a bunch of screwball managers who, I don't know, spent too much time reading the media about this was the new way of working. Mm-hmm. And I could remember people telling me, oh, but they're, people are working from home. They work harder from home than they do in here. And I said, well, first of all, I don't buy that stuff. So second of all, I just walked past the labs where all the technicians work, how are they doing their job from home on Mondays and Fridays? And of course, this was all just a bunch of baloney that everybody told each other and not recognizing it was a company in crisis. And Gio, to his credit, putting him in the job, understood that. And I've been very impressed because he has what I call a capacity to grow, which oftentimes you can't see in an interview. To be observed real time. And his capacity to grow just continues to impress me. And it's probably one of the reasons that we get along so well. We have just these terrific conversations about the business, what we ought to do. I'll have an idea, talk to him about it. Sometimes we do it, sometimes we don't, because it's not a good idea. Same thing with him. We just want the business to do well. And it's just, and he can make it happen. He actually is relentless in making things happen. So you can tell I'm a fan.
Look, the proof's in the pudding, right? Look what he's done with the company. And since he came in, I think it was January 2023 or so, in the past, 16, 18 months or so.
Yeah, he actually started doing the job even before that.
Really?
So, it's kind of the way we constructed it. But he was basically running that in the Americas 3 months before that because I needed to get somebody like Gio involved. Yeah, the guy's terrific, just terrific.
Yeah, no, first of all, it's a phenomenal story for a couple of reasons, and I'm just going to point them out to our listeners. Is number one, even in the computer age, the AI age, it comes down to simple showing up as 90% of success, right? So that's really it. Just show up in the morning, right? Just come. My father always told me, he goes, tell me, you're not going to be the smartest guy in the room. You're not going to be the richest guy in the room. There'll always be someone richer or smarter, but you could probably be the hardest working guy. Get there a half hour before everyone gets there. Leave a half hour later. Just sit there. You're going to just do well because people just don't show up. It's that simple. You tell the middle of a person, you tell them be here at 9 o'clock and they're there 8:30. That tells you something.
I couldn't agree more.
And that's number one. Number two, you're old school. You went there. You didn't wait for a report. You didn't wait to get filtered. You walked the building. You looked around. You didn't see anyone, and there was nothing cutting edge or technologically innovative about your idea of you have to have your ass in the seat. If you're not here, you're not working. I'm not interested. And by the way, just curious, out of 1,500 people, just throw a ballpark number. How many are actually in?
I'm sorry, how many actually?
Out of 1,500, how many were actually there that Monday morning?
Oh.
Less than half, less than a quarter?
I was going to say somewhere between 50 and 100.
50 and 100. So you're looking at less than 10%, not even 10%, 5%. Wow.
Yeah.
Did your stomach...
Everybody working.
Did your stomach drop?
The part that incensed me was, they were still in that 3-day week, but I thought maybe there would be some people there. But the part that incensed me was the management team was not there. And if you have the leaders not showing up, you can't have leaders who are not there telling others, you need to come to work.
Yeah.
You got to walk the talk.
Yeah, that was, I remember back in the day, you probably remember, of course, 1982, it was a book by Tommy Peters and Bob Wasserman. It was Waterman, I think. Bob Waterman was In Search of Excellence. And he was two McKinsey guys, and they looked at companies and what worked, which is really interesting because most of those companies didn't work. I think Wang Computers was one of them. But the point was, they were called MBWA, Management by Wandering Around. Just managers to get off their ass and just walk the floors and see who's there. And if you walk around out of 1,500 seats and you see only 50 to 75 people, there's something's, especially if your building's on fire. No one's working. It's either this or no job. Right. So that's it. Wow, that's phenomenal. All right, let's go right to your book here in the time we have left. You came out with this book, and it's a rehash. I don't want to talk about the old. Because I just downloaded this. I just bought the Kindle, and the name of the book is How to Be a Leader: 15 Minutes a Day to Establish Communication, Resiliency, Creativity, and Humility. Look, there's a zillion leadership books out there. What does this bring to the game?
Well, I'd like to think that one of the things that it adds is I've actually done most of this. Actually, there's nothing in there that I haven't done. So this is from practical experience. The second thing is I've said about most business books that they would make great pamphlets, that it's 10 pages of useful concept followed by 250 pages of stories that just say the same thing over and over again.
100%, right.
And I didn't want to do that. With both books, I wanted something where every chapter was something that you had to think about. It wasn't just something you could flip through and say, okay, same thing as the other story, except a little different, but says the same thing, which I never found all that helpful or useful. So I wanted every chapter to be, oh, I got to think about this. Is there something here I should be doing, or I ought to be thinking about, or that could apply to me? So that every day, even though it only takes them 10 to 15 minutes to go through it and think about it, it gives them something that different that they have to think about, which I think is pretty rare when it comes to leadership books. And it's not all about, I think too many are also focused on the kind of rah-rah kind of stuff. And you've probably heard me say this, that I've said about leadership, it requires three things. The first one is the ability to mobilize a group, which usually you think of as the rousing speech, and that's the most visible, so it's the easiest to observe. And that's how we tend to judge leaders, but really that's only 5% of the job. The next two steps are the big ones. The second big step is, can you pick the right direction? Can you make the right decision? And that's a fundamental part of leadership, because if you've got everybody mobilized, but they take the wrong hill, it's not going to matter. How rah-rah you got them going isn't going to make a difference. So the second one is, can you pick the right direction, make the right decision? Then the third one is, now you've made the right decision, pick the right direction, can you get the entire organization moving step by step in that direction? Those last two are what really matter to leadership performance. And they don't get talked about much.
Yeah.
A lot of leadership books, in my view, tend to focus on the first item, not those second two. And I think people reading it will say that when it comes to the second two, there's a lot of, let's say, useful stuff in there about how to do that.
Yeah, I've read the book before your publisher put it in a much simpler, easy format, which is, folks, it's a 60-day really blueprint. Every day takes you, 2 minutes to read, and you just follow one after the other, and it's story point, and you walk away with understanding exactly what it is. I liked the previous book, but I know people don't read, but this was so much easier to get through. And by the way, I gave it to my sons to read, and they looked and said the simplicity of it was, that's it? I said, yeah, that's really it. There's not much you need to do to be successful. Right? Just come early, leave late, do the right thing, and work hard. And work hard on something that's it's not all the science, but I do want to share. And, this is something I want to share with everyone. When I had Dave on the podcast close to 3 years ago, and you didn't have to know anything about Vertiv, but you knew what he did in Honeywell, I want to read you the quote, which comes right from the horse's mouth, right from Dave's mouth, when I asked him what's the blueprint for Vertiv. And here's what he said. He says, I can say that we're implementing the book at Vertiv, which is a $20 book that you could have bought back in 2020 when it came out. Here's what you said, and I quote, and I can say that we're implementing the book at Vertiv. That is why I know it works. It's not like it was unique to Honeywell. If you ask the Vertiv folks, they'll say we're doing what's in the book. So here, for a $20 book and a free podcast, you could have easily got a 10-bagger on really without doing anything more. And here's the thing, even when they didn't follow the book exactly, you came back, smacked everyone upside the head and said, get back and follow the book. And that's what everyone's doing now, right?
Yeah, I'd have to say there's a lot of truth to that. And I'm going to reiterate this, but the thing I tried to do in both books is talk a lot about how do you go about making a good decision, and how do you go about getting people moving step by step in the direction of that decision, which again doesn't get discussed much when it comes to leadership, but those are the two most important of the three things. The rousing speech, fun, people can go out cheering, but if you got them chasing the wrong hill, it's not going to matter.
One company that we've followed for years, and I've been an investor and just a big fan, fanatic about it. I shouldn't say big fan, is Costco. And Jim Sinegal, he not only he got everyone, he had the message, but you go into Costco. I don't think in the years that I've shopped at Costco and I've been a member, did I ever experience one of their people just not doing the right thing or just being mean or not mean or it's not my job or not knowing something. To get that filtered down across a geography which spans the globe and to tens of thousands of workers is magic, because not everyone could do something like that.
I am a big Costco fan, and I love going into Costco stores. And I'm a big process guy. I mean, you see that in the books. And what they've done to simplify all processes associated with retail and to forego, let's say, some additional profitability on some items just to make sure they retain that process simplicity and that customer satisfaction, I think is just superb. The only problem with Costco is I always walk out spending more than I had planned when I walked in, because my wife and I will see stuff and say, oh, we need to get this for Christmas for the kids, or, oh, boy, we could use one of these things. It's terrific. And I agree with you. Jim did I've only met him once and was quite impressed.
No, it's just, Charlie Munger, who was on the board for years and a big fan. He couldn't stop, and Buffett used to make fun of how often he talked about Costco. Munger said that you just can't catch Costco. You just can't, because the culture, the whole environment, the way they created their business model, who's going to catch them?
I'm a big culture fan, as you know, and it's one of the things that you hear us talk a lot about at Vertiv, and establishing a high-performing culture. And what does that mean? It doesn't just mean making your numbers for the quarter. It means, are you always doing the right thing? If you can help somebody, do you go out of your way to do it? Are you keeping an eye on the future at the same time you're looking at making the quarter? And what do you have to do in order to prepare for it? There's a lot that goes into creating a high-performing culture that isn't just cut costs and make the quarter.
Yeah, look, employee trust from your customers and the people you do business with is a competitive advantage.
It sure is.
You and I go in.
And if you establish a good one, it's much tougher for people to replicate.
Oh, it's Miles. There is Costco would have to do a lot of things wrong to lose the trust of people like you and I. We tolerate dips of any sort for a short period of time because we are so, and I speak for you, correct me if I'm wrong, but the trust that when you're buying something at Costco, that they're only marking that up either 14 or 15%, depending on if it's a Kirkland product or not, you're getting the best possible price. You have the trust that they stand behind their product. You can go up there and return anything. And there are things on YouTube and TikTok of jokes of people taking couches and bringing them back. And I don't like it anymore. Here's your money back. I literally was online, Jim, one time. I'm sorry, Jim, I said, Dave, I was online once at Costco and on the return line. I kid you not, there was a man returning. He bought a big piece of salmon, a big, they sell the big sushi grade. He was returning half a salmon. And they took it back, smiled, went on and spent more money. I just looked, I said, where else can you get salmon and return it? Who knows if he ate half of it, didn't like it, whatever it was. But that level of trust that the customer has, the relationship with the company, and I know Vertiv is because when you hear Jensen of NVIDIA talk about NVIDIA, they're a vendor. You're not even a vendor. You have a relationship with them that Vertiv can't betray that trust, because if they do, it's gone.
Yeah, we got to be able to deliver in a way that allows them to successfully launch and sell their products. People need to know that they can buy those chips and put them in a place where they're going to work just the way they're supposed to.
And he has to have that confidence in Vertiv, because his empire,
Yes.
his 2.5 or 2 trillion, I don't know what their market cap is up to today, has a lot to do with those picks and shovels. And if those picks and shovels don't work, he's in trouble.
Yeah, I guess, we're going back to the beginning on this one, but it's one of the things I love about America again, just that a guy like Jensen, who labors for years, decades, almost in obscurity, working on this revolution, technical revolution, can make it happen, and all of a sudden becomes extraordinarily wealthy because of the value he's created for the entire American economy and the world.
And the world.
It's gonna he's gonna impact the world. And I just love seeing that. I'm a big believer in the American dream. As you know, I was the first one in my family to graduate from high school. My dad had 6 months, my mom had 2 days. And there aren't a lot of places in the world where that's possible. It was here.
No, absolutely amazing. And before we go, Dave, I could talk to you for hours, literally hours, but this is just phenomenal. Folks, I want to just share with you, go get the book. It's $10 or $11 on Kindle. You can buy the hard copy. The point is this. If you're a school teacher or you run a hardware store or you're a barista at Starbucks, the information that Dave put on leadership, it really transcends business. It's not only common sense, which it really is. It's how to get all your ducks in a row, get that message out there, and I can't say it simply enough, how to be a real leader. It's so. Would you agree with me? This is for someone. If you're just where you have to get people to follow your message. I think this book is worth its weight in gold.
It's kind of interesting about leadership because I can't say I ever read a book where I saw all this stuff in one place. So this is really things that I've accumulated over the course of a career to say, how can you be successful as a leader? And I've tried to put that all in the book. And as the old saying goes, common sense is not so common. So it's hopefully makes it easier for a bunch of people who are beginning leaders and trying to figure out what the right way is to do something. Hopefully give them the opportunity to have a leg up versus having to do it the way I did.
Yeah, 100%. So before we go, Dave, I have two questions for you. Give me a CEO other than Gio, that you think's doing a great job out there of a public company, someone that has all the characteristics of leadership and is able to produce. It could be a company you invested in or not, public or a public company in your industry or not, but someone that if I wanted a benchmark of who Dave thinks is a leader, is a good leader, it would be?
Yeah, there's a number of them. Larry Culp, who's went into GE and fixed a real mess there. And I had a lot of respect for him when he was at Danaher and still do. I think Tim Cook's done a great job at Apple. Jensen Huang, we talked about, terrific. Satya Nadella, a guy I'm fascinated by. I would not want to be him, but I'm fascinated by is Elon Musk.
We saw Satya Nadella of Microsoft, right?
Yeah, yes.
Okay, I'd say Elon Musk.
Elon Musk, I read that Walter Isaacson biography, and I really loved it because it showed he really understood how manufacturing and engineering need to integrate, and how do you push yourself to think bigger about things and more broadly about what a potential solution was. And I love that he, with Tesla, initially automate everything and then switch to say, no, take automation out because people can actually be a lot more flexible than robots. The rapid prototyping, test it and see if it works instead of being 100% confident it's going to work with all the expense and time that takes. So he's another. I'm sure off the top of my head, it kind of surprised me with that one, but those would be some that I'm particularly impressed with what they've done.
Yeah, amazing. And last question for you. A company, not your own, a public company that you really admire.
I'm sorry, a company that I really admire?
A public company, publicly traded company that you admire. It's not Vertiv. We'll leave Vertiv aside, but is there any public, we just spoke about Costco. Is there any Costco-type companies out there that come to mind that you admire for everything they do, the trust that they have, the culture, the CEO, just everything's firing on all cylinders?
No. Actually, it's going to look very similar to the answer I just gave you on CEOs, because I wouldn't say somebody was a great CEO unless they were running a very good company with a very good culture. So, I tag all those companies into that.
Isn't it amazing if you just just follow great CEOs, and that's what we do. The first thing is, if there's a company in an industry that has a huge tailwind, the next question I ask is the CEO a rock star? Because you could have a company in the right position, but if you don't have that CEO that's keeping all the oars in the water at the same time and everyone rowing in the same direction, you don't have a good business.
As I think about it, the company that I would say keep an eye on, and you're going to think this is a little self-serving, and maybe it is, but Honeywell. And there's a new CEO and chairman soon, hopefully. His name is Vimal Kapur, and I'm a big fan of Vimal's. I've known him for 20 years, and I think you're going to see him get Honeywell much more on a growth focus, which they've, let's say, not had for a while. And whether it's organic growth, inorganic growth, kind of reinstilling more of a risk-taking culture, intelligent risk-taking culture, I think you're going to see big things from Vimal. So that's one that I would say, I don't think it's there yet, but I would keep an eye on it.
All right, so God willing, we'll have you on the show in a couple more years again, maybe sooner. Honeywell's around $200 or so a share, $135 billion market cap. If they do half as well as Vertiv, we'll have a lot of happy people.
Well, they have the opportunity. They're in the right sectors, and they got the right leader now. So I'm pretty psyched about what's going to happen there.
Yeah,
so keep an eye on it. You can mention it to me in 2 or 3 years, and hopefully you'll say, wow, I wish I'd listened to you and bought Honeywell then.
Yeah, no, I'm not doing that again. I'm listening to you finish. I watched you for 16 years at Honeywell, saying this guy can't keep doing this. So last thing for you, really last thing for you. I don't want to take more of your time, I bet, because maybe we'll speak again shortly and have you another podcast, because I really enjoy this. You bring so much value. And folks, just to let you know, one of my sons recently got married, and I was on a call with Dave last week. My son walked by, said, hang on, I said, Dave, would you mind speaking to him? He got on the phone, spent time with him for a few minutes, and the advice you gave him, we were talking about it the other day. He just recently got married. He was pretty excited about your advice. Dave, you bring a lot of value. You bring a lot of value in all that you do.
Kind of you to say, and of course I wish him the absolute best in both his personal and professional life.
Yeah, and his portfolio, he owns Vertiv, so he has, like I said, he has a picture of you over his bed, and he prays each night for your health, good health.
I can use all the help I can get.
Okay, there's one thing just before we go. Honeywell, which I was looking into just a few weeks ago, they could just, I know it's you just follow this as you're not part of the company anymore, but since you were CEO. The quantum computing aspect of it is really phenomenal. Could you just give us some insight on that?
Sure. Okay, I'm going to back up some and say I don't know if you've read any of the stuff that I was writing 10, 12 years ago and continued on, but I kept saying that in this century, there's going to be 2 big technology and developments areas that everybody has to watch. One is bioengineering. The second was the digital age. And when it came to the digital age, my comment was, the Industrial Revolution went on for 100, 150 years. We're only 40 years into the digital age. And it's one of the reasons that I like Vertiv so much. I said, that's smack dab in the middle of the digital age with something I understand. You're not going to see me developing software, but I do understand this other stuff and how software can be used. So that's kind of the precursor, the backdrop to think about. I'm a believer that quantum computing is going to be one of those evolutionary steps in computing. And everybody likes dissing it now because whenever something's new, everybody likes talking about what doesn't work. It was true with horseless carriages 100 years ago, and it's true today with something like quantum computing. I mean, there are some technologies that never turn into anything, but quantum is going to turn into something. So we had the opportunity to get started in it, and we did. And I'd have to say my successor continued it, which I think was good. And we were focused on the hardware side. There was a very good company that I was well aware of called Cambridge Consulting. Not consulting, Cambridge and I forget now, Cambridge Systems or something like that.
Right.
Ilyas Khan was the CEO and chairman. They were focused on what's the software you need in order to run these quantum computing hardware systems. So those two businesses were brought together to create Quantinium, which is a quantum computing or JV between, or partially owned by Honeywell, partially owned by the previous owners at Cambridge. I expect great things out of that. And that's one of those kind of sleepers, because if you take a look at Honeywell earnings, it's all negative, right? That's mostly expense. And you don't get credit for that in your price earnings multiple because it's negative. And nobody looks at it and goes, oh man, this thing could be a significant value generator. But I fully expect that it will be at some point. It's one of those where everybody go, wow, that was a decent chunk of change for what they put into it.
Yeah.
But we've got something that works. All right, it's an ion trap technology. We're very confident about it. And I think you're going to see great things come of that.
Yeah, it's one of those hidden jewels buried into Honeywell. That's, at Honeywell Quantum Solutions and Cambridge Quantum, together, Quantinium, which is just staggering, the world's largest integrated quantum computing company. And it's Honeywell. It's buried in there. Part of it is buried there in Honeywell. It's like you have a call option on quantum computing.
Which I'm a believer in. I really do think it's, there's still things they got to figure out, but they will.
Yep.
And this is going to be quite impressive, whether you're thinking about encryption, weather, climate, anything with any kind of forecasting, where you're dealing with a very complex set of equations, algorithms, all kinds of miscellaneous data. People are going to, 20 years from now, will look back and say, wow, imagine all those guys used to think quantum computing was never going to work. Well, guess those experts didn't know what they were talking about.
Yeah. I'm 100% with you on that, 100%. So, Dave, you give us a lot of great information. You give great CEOs. You give us some Honeywell and also more in quantum computing. So the name of the book, folks, is How to Be a Leader, 15 minutes a day to establish communication, resiliency, creativity, and humility. For the price of, I could say now, a cup of coffee at Starbucks because they're so expensive, you could get Dave's 40 plus, and I'm being kind, I don't want to say more, 50 years of business experience. Would that be fair?
Yeah, it is now.
Yeah, close to 50 years of business experience for the price of a Starbucks cup of coffee and a Danish. So I can't think of a better thing. And last time we had Dave on, he spoke about his book, and he said Vertiv was following the playbook, and that's up 10x since. So I think that's a pretty great return on investment. Dave, continued good health and success, and just keep doing the great things that you do. And I'm going to be smart to just keep following what you're doing.
You're very kind, Charles, and I appreciate it. And this was fun as always.
All right, Dave, thanks so much.
See you, man.
If you love the show or disagree with it, shoot us feedback. Please review us on iTunes and subscribe to the show anywhere good podcasts are found. This is Charles Mizrahi for The Charles Mizrahi Show. Thanks for listening.